Hey, it's Soleil, and this is episode 397 of the Orange Pill Investor. And today I'm going to do a little bit of self reflection and review with MSTY. And yeah, that I'm 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 not like deep on Pantera's library, but somebody requested it the other day, and it's arguably, you know, one of the best covers of all time. So I had to pull that one out of the hat. So apparently I do requests now. What's up, Trollstein? What's up, Kevin? What's up, Kanal? What's up, Pete? All right, so I decided to pick apart my challenge trades and see if I could explain what's going on with MSTY. Because, when I started the challenge, I'm like, okay, I'm going to destroy these fuckers. And I think I might have done the community a little bit of a disservice by letting them win. And so, I see a lot of comments like, "Hey, why should I even bother learning how to sell covered calls? Because, um, you know, Soleil's trying to beat him and can't do it." It's only been 3 months, but he can't even beat them. And so screw it. I'll just pay them the 1% management fee and fuck it. I'll just let them trade on my behalf. Um, So anyway, I went in, downloaded all of the accounts trade history. For some reason, all of the dividend payments were not in the activity. So I had to contact the little chat people. Taste Trade gets back to you pretty quick if you do the little chat now. And apparently, there's a history tab, so I was able to get all of my dividend payments or whatever, and then of course downloaded it to a spreadsheet. And I did the same thing with all of my trades. And yeah, if anybody can poke some holes in this, please do. But basically, I just filtered it for all of the dividends, right? So those are the ones highlighted in green. And over the three months, they have paid out 36,919 dividends. And I started that account with 200 and I think it was $15,990. Which I guess I could do some math, and I should have checked and see how much that actually works out to. So 3,691 divided by 215. I think it was 990. If not, it's close enough. So 17% over 3 months is pretty legit. And that doesn't take into account, MSTY's price has changed because when I got the first dividend payment, I got 14 grand because the price of the shares was higher. They were probably collecting more premium against it. And then the second dividend payment I got was much less. And then the third dividend payment I got was a little bit more. Right about the same though, but slightly more. So I did the same thing, downloaded all of my positions in my account, but this one took a little bit of manipulation because unfortunately they don't really change the description on these. It's basically you got four choices. You either sold it to open, which would be all of my covered calls. Then there's buy to close, which would be all of my closing my covered calls. Then there's buy to open, which would be all of the long calls I purchased, some of which would be, the attack the tail 1080s. More on that later. And then it also includes the poor man's covered call positions that I bought. and a bunch of those, I still have like 10 of them open, so there's no, those still have unrealized losses at this point, so it's weird trying to figure those out, and then there's, of course, there's sell to close. So again, with the 1080s, you'll see, uh, that they were bought to open much at a much higher value than sold to close. Okay, so if I filter these for just sell to open covered calls and then buy to close covered calls, made them all green, and oh, I filtered out blanks. My bad. Let's do, there we go. And so the total premium that I collected over the same time period is $44,945, and MSTY has paid out $36,919. So how can it be that I collected more premium, pretty significant amount more premium, uh, but my account is still down like $17,000? And the reason is if I filter this by the other positions, all the buy to opens and sell to closes, and then you can see the red highlights are anything with a 1080 in it. And when I sum those up, I called this the net 1080 funeral pyre because I basically lit $43,038 on fire. So the underperformance of the MSTY challenge account isn't the covered call positions, because to be completely honest, there's no secret sauce, right? You can sell near at the money and weekly covered calls if you just want to mainline a bunch of premium and no upside. You can go out to the point 0.3, the point 0.2, the point 0.1 delta. You can go out 2 weeks, 3 weeks, 4 weeks, 5 weeks, 45 days, 60 days to expiration. If you want to build more upside in to the positions and maybe not sell as much premium. But really, I mean, and you can just, if you stay with under 60 days and anything above at the money and just kind of throw a dart at the dartboard, I'm not going to say it doesn't matter because some of them will have better results than others. But to a certain extent, if you have a net positive theta in the account, you're an option seller. As long as this is positive, then you are philosophically a seller, not a buyer. So I think what I did by just plowing money into the 1080s and basically losing 90% of it, because when I basically decided that I was going to, those are the Septembers. Where's my Julys? Yeah, here we go. When I decided to go ahead and sell all of my Julys a week or two ago, I only retained like 10% of the value, maybe. And so I think what it did is it gave the community a little bit of a false sense that MSTY, is doing something amazing, like they have some kind of magic secret sauce that they're using to come up with these trades, and that like regular people can't even compete with it. But I think if I had just taken the $44,000 and bought shares with it instead of 1080s, I'd have an extra 100 shares would cost me. Let's see, when I started the challenge, we were at 370 a share, something like that, and I think at one point we were down to 239 a share. I think the the lowest we closed might have been like 249 a share, something like that. But anyway, if that averages out to like 300, 310, then 30 grand would have got me 100 shares. Another 50, excuse me, uh, yeah, 30 grand would have got me approximately 100 shares. So maybe I'd have 100 more shares of strategy now than when I started. And one of the benefits of having more shares is exactly what happens when you have more Misty, because the 14 grand was plowed into more shares, right? So I bought another almost 600 shares of MSTY. And then same thing here, bought another, yeah, bought another 500 shares after the second dividend and bought another 594 shares after the third. So if I had simply just copied the DCA strategy, basically a drip, then maybe I would have paid like on average 325 for those 150 shares. So those would only be down like 3% or something, instead of buying the 1080s, which absolutely went up in smoke. These numbers are almost identical, which is kind of funny. Funny in a sad, depressing, crippling depression kind of way. Um, and I kind of want to make it clear that I'm not trying to like minimize the fact that I've underperformed. It's just that I think the explanation is not what a lot of people have concluded, in that, hey, an experienced option trader is having a hard time beating MSTY. It's more like, uh, I, you know, I collected more premium and then wiped wiped my ass with it, and spent it on hookers and blow instead of an actual asset that won't just depreciate. Now, does that mean I'm going to stop buying them, the 1080s? No, because I'm no quitter. You know what I'm saying? I pretty much have to revenge bet my way back into profit at this point. Um, I'm only half kidding about that. Um, like, is losing all of that money on the 1080s like reasonable? And it pretty much is, because let's just look at the Septembers that I've started buying into. So the delta on these is 0.06. So these things are not really supposed to win that much, right? If the zero point zero 0.05 would be like 19 out of 20 times you lose and then one time you win, but you win so much with the winner, it cancels out the 19 losers. So these were always supposed to be lottery tickets. And my mistake was that I wanted to beat them so badly and just trounce them, that I thought, oh yeah, strategy will correct, but then we'll be back before you know it, right? Um, but the problem with the market is it doesn't do what you want when you want it to do it. So the Junes didn't work, the Julys didn't work. I have, much more confidence in the Septembers. That would be almost 10 months from the November pump. And not that history has to repeat itself, but the November 2024 pump was, what is that, 8 months after the March. So 8 months after November would put us at July. So as long as we get something to happen by July, uh, you know, I think I'm okay with these Septembers. And if they don't, then I will just be in the next 45 days, I'll probably stop buying Septembers and I would be buying October, November, Decembers by then. So if not June, July, if not July, September, if not September, December. And at some point, unless my basic assumption that Bitcoin is going up, which means strategy is going up, like if that assumption is nullified, then yeah, this is never going to work. I'm just going to basically be lighting the premiums on fire forever. But by the same token, if you're going to light your 1080s on fire, you might as well kind of do it for free, right? Because I sold covered calls against most of these positions. And since strategy's been going down, all of that 40 grand was pretty much free money. There's no such thing as a free lunch, but all of the covered calls have printed, and I wouldn't have had that money if I didn't sell them. So those scratch off lottery tickets that all turned out to be, giant losers, at least were paid for by the option selling itself. So that's probably like, you know, when you try to stage an intervention on an alcoholic or a drug addict, and they just try to make excuses for for their addiction. That's probably what that is. That's just me not wanting to give up on the high of buying the 1080s and hoping for a 10x, a 20x, or whatever. But at least it's not. At least it's not like, oh, okay, I have no I have no shares and I'm just buying 1080s and and lighting it all on fire, right? I've got my base position, I'm generating an income from it, and then, being extremely risky with that money that was collected. So, hasn't worked out, but the only way that it won't eventually work out is if the 4-year cycle's over, right? If we're already in the bear market, yeah, then this is never going to work. But, we get back to all-time highs or we get another run to, Bitcoin makes a run to 150. Um, even if we just hit all-time highs again and get to like 110, 125 or something, you know, we're we're uh we're dancing in the streets again. So, nothing about this analysis changes the fact that they're winning. It just kind of explains the dumbass um, the dumbass trades that I've made with the premiums is really the difference here. So it's not like selling these 425 strikes at 45 days to expiration was some kind of mistake, and MSTY chose a better strike and a better expiration, right? That's that's not really a thing. This 335 is pretty routine. This was like 5-ish% maybe out of the money when I sold it. There's nothing like there's nothing I don't know, nothing game breaking about this. Oh, but I forgot to so the title of the video is some people will remember, Denny Green when he was the coach of the Cardinals, lost a game to the Chicago Bears, and he's got a really um, famous video of his, question and answer session after the game, and he's like, "The Bears are who we thought they were, and we let them off the hook." And that's pretty much how I feel about this trade. Is if I just didn't egghead it, if I had just plowed the money into a very safe asset, literally just more shares of strategy, uh, it would be much different. And got nobody to blame but myself here. Just being really greedy about the situation, to be completely honest. It'll eventually work out, I think, but making this video and doing a little bit of math and research was important to me because I think a bunch of people are being led down the MSTY path based on these results, like based on this poor performance. And I that makes me feel a little uncomfortable. I think MSTY is a perfectly rational, reasonable choice if your expectations are reasonable, right? You know they're going to underperform because it's a covered call strategy for the most part. You have to be pretty lucky not to underperform just holding spot MSTR to begin with. But then you're going to pay them a management fee on top of it. So there's a lot of headwinds. And as long as you're going into it saying, you know what, I want to generate income for whatever purpose, and I'm just willing to, pay them the fee for the convenience, right? If you're willing to pay for that convenience and that's what you are going into it for, then I think that's fine. But if you're buying MSTY because I can't beat them in the challenge, then I think you probably have the wrong idea there. That's not what you should be learning from from them beating me. It's there's not like any magic to the strikes that they've picked, and there's a little bit of context there. So doesn't change anything. They're still beating my brains in, and that will continue until until we see a strategy price of like 350 again. I'm guessing if we hit 350, we'll be easy peasy, lemon squeezy, at least back to even Stevens again. And if we get any type of rally whatsoever, then the 1080s will print, and I can finally show my face in public again. All right, let's check the chats and see if anybody's roasting me in the comments. What's up, Josh? Hoping you had a great Easter weekend. Same to you. What's up, Deck? Magic Pieces leverage is one hell of a drug. It damn sure is. I feel like Dave Chappelle. You know, you got any more of them 1080s? Andrew Moser letting them win. Yeah, I thought I would just spot them like 20 grand in profits just to make this challenging. Deeply hope you're doing good, Soleil. Happy Monday, gang. Same to you. To be fair with Misty, you can deploy every approximately $20 of dividend you earn immediately, but without the DIY, you need 16 grand to sell a poor man's cover call and another 16K to earn more. That's an absolutely excellent point. So, yeah, the 16 grand that I initially got, where is it? Right here, 14. Yeah, I was able to get however many multiples of shares, right? This was before the drip kicked in, so I had to buy these shares myself. So I bought 585 shares, and back then when the price was like 350 a share ish, I wouldn't have been able to take, 15 grand or even 20. Like, let's say I out traded them. I'm just making up bullshit numbers, but let's say I out traded them with 20 grand. I can't then get the power of compound interest by, you know, adding increments of $20 a pop shares. I would have had to have waited to the second month potentially, and then, maybe the 10 and the 14 added together would have added enough to maybe get a poor man's covered call. So that's a great point. And I used to do some videos about reaching critical mass. Let me see if I can pull that up. It's not in my recent. What did I even call that damn file? Model to 10K? Yeah, here we go. Oh, no, that's not it. Damn it. Anyway, the point is, however much premium you can collect, if it can get you an extra 100 shares of something, then you can sell another covered call on that additional portion. But if the amount of premium that you are collecting can't get you 100 shares of something, then you can't get that compound interest working for you until you are able to collect that much. So if I'm going to say, look, the only thing I'm going to sell is strategy, then yeah, I wouldn't be able to come up with another 100 shares of strategy for a couple of months. And so with a cheaper stock, like a $20 a share stock, you know, you'd only have to sell $2,000 worth of premium to get another 100 shares of that stock, and then you'd be able to sell, an additional covered call. Um, and so that's why in my 5K account, I'm trading a bunch of the mining stocks. But that's not really how this challenge works. But if I wanted to add additional positions here, I could say, all right, I sold, 10 covered calls, approximately, $500 a pop. So that's 5 grand. And then go out and say, okay, well, what can I buy with 5 grand? These mining stocks are all under $50 a share. So I could get what? Um, let's see, 1,000 shares of CLSK would cost me 7 grand. So I don't know, 600 shares of CLSK, something like that. If I really wanted to immediately start collecting more premium faster, I guess. And then, you know, I sell my second round of strategy the next month and get another 10 grand or whatever. And then I could sell those shares of CLSK and then jump back into strategy. Something along those lines. If you didn't want to just be sitting in like weird numbers of strategy shares, like I have 209 shares. So that 9 shares I can't sell a covered call against. I can't just sell 9/100ths of a covered call against this. So, that's something that people could do. But then, the more positions you add, the more complexity and the more time it takes to deal with this. And for some people, it's literally just about the convenience. So, if you're willing to underperform for the convenience, have at it, I think. All right, let's take a look. Magic Pete, I've been rolling my weekly 260s as is for 2 weeks now. The patience game is hard. Send hugs. Your weekly 260s, meaning you sold 260s and you just keep rolling them, trying to whittle it down to where you can actually roll out for a credit at some point. That's gonna suck. Let's see. Deeply, was the spreadsheet done by yourself mostly, or does Tasty offer a CSV download to provide the base? Would be helpful come tax time. It looks like, yeah, they've got some stuff that you can download for all of the positions. But where I went for this one was I went to history, did my dates because I started the challenge on January 23rd. So I customized the dates, and then there's just a nice little download button here. But if you go into, your annual tax documents, they do have an Excel spreadsheet, and I can't remember which one I uploaded last year to TurboTax. I can't remember if they accepted PDF or Excel, but whichever one, I was able to just upload it, and I probably had thousands of trades during the year. Um, yeah, to go that line by line would have been pretty brutal. So there's some way that you can there's some setting that lets you just do the totals. You add up all the totals in the column instead of each individual position. And then as long as you attach it, I think the year before I literally had to attach fucking 50 or 100 hard copy pages before TurboTax allowed the upload, or maybe I just didn't know it existed. So I think I had like a 100 and something page tax return in 20 for 2 years ago. But last year I was able to just upload the whatever the end of the year tax document forms are. But yeah, these are customizable little download features here. Andre, how do you feel about MSTR selling at the market and diluting common shareholders? Josh Mann's not happy. Yeah, I I reading Josh's tweets, I think gives me a little bit of heartburn, but it's necessary heartburn. Like it's things that need to be said and need to be thought about. I don't mean that he shouldn't be posting those things and giving me heartburn. I mean, like, when somebody who's smart and respected posts those criticisms, you have to take them seriously and think about it. Whereas your average shit poster is just, blowing hot air. Um, and so those type of bears are much easier to dismiss, but it's a little bit harder to dismiss some of the things that Josh is talking about. Initially, when they came out with oh, they're only selling 3% of the total volume, and at first I was kind of like, oh, okay, reasonable explanation. And the more I listened to Josh's complaints, I don't know that it's a open and shut case that the ATM is suppressing the price, but I think it's at least a little bit more rational. The only thing that I wonder is that if strategy tried a little bit more of a sophisticated approach, like if I'm not sure that there would be as many cultists like myself that would just be like, okay, yeah, we understand exactly what's happening here, and would just be able to just diamond hands through some of the volatility. I think that's the point with the common stock shareholders is they're actually selling the ability to stomach the volatility for a long-term return, just like a Bitcoiner would. If you're gonna hold for an entire cycle and, not care that it was 250 in March and April, I think maybe that's kinda what he was going for, and, yeah, so I'm just not sure, like, I'm sure if Josh was put in charge of Strategy's balance sheet, um, maybe he could squeeze out some more juice from the whole thing, um, but I don't know. I don't know if that would I don't know if that would have the same psychological effect on the market knowing that a company is trading in and out of positions. Maybe it could, um, especially as popular as Josh has gotten recently. Maybe he could take over that balance sheet and nobody would bat an eyelash. They'd be like, "All right, cool, we're in good hands." But, I don't know who the people that he's got working for him seem to be able to at least grasp that when Strategy's MNAV is high, they can buy more Bitcoin with it, even if Bitcoin is also high. So that's kind of where, some people are like, why aren't you buying the dip? Why are you buying at all time highs? And it's because Strategy, you know, the time when you're going to get a bigger Strategy price in its ratio compared to Bitcoin's price is when it's running. So you're almost kind of like backed into this corner of buying Bitcoin at all-time highs because that's when strategy is going to be at even higher all-time highs. Um, but I do concede to his point that when, strategies, it does seem kind of like a bad look, or it's a little bit hard to stomach when you say, "Oh, okay, selling ATM here, okay, sure, that makes sense, right?" But then it's like, okay, we're barely off the correction, right? We've tested 240 3 times. And I didn't check the announcement. I don't know, did they sell common stock shares, I would assume, to get that much Bitcoin? 6,000 Bitcoin, something like that? Yeah, I thought they would pretty much just start, and Josh said as much. I thought they would pretty much just move over to, "Hey, we're only gonna sell the common shares to pay the interest on the Strike and Strife products." I think that would be very easy for shareholders to stomach. So yeah, I can totally relate with some heartburn that, hey, we're only pumped, we pumped back to 340 a share back here, right? It's like, okay, we pumped to 340 a share, let's claw our way back. And like, oh no, fuck it, let's sell at the market. Like that could be reasonably an annoying strategy to go with. Yeah, it does surprise me. I think I think that's what he was saying too, is like, "Hey, I thought we were supposed to be leveraging this and adding a bunch of, capital raises and convertible bonds and stuff." So we haven't really seen them aping into these convertible bonds. So that's a bit of a concern. Um, so could they do better? I probably. So maybe they just need to hire Josh. But at the same time, my my investment thesis and strategy amounts to really just two things. They're disrupting and they're the clear winner. So none of nothing that they have done, even the ATM selling, changes that. I think for anyone to call themselves open-minded, you have to identify your falsification criteria. And so, what would cause me concern and make me, that would falsify my belief in strategy would be if they actually took on too much leverage and expose themselves to maybe getting blown up, or I guess if they got to like 2 million Bitcoin and they had, maybe Bitcoin's market cap was the size of the bond market and they still hadn't found a way to make money, like, with some amazing product, I think that would bother me. But maybe going to the ATM in not the optimal way, that doesn't invalidate my investment thesis. Um, it still maybe should be something that people that are knowledgeable should complain about, but um, I don't really have the expertise to critique how accretive the ATM is at $314 a share versus any other share price. Magic, yep, waiting for a dip. Deeply says that's awesome that TurboTax supports an export upload to make things easier. We've used that in prior years, but this coming year will be the first I'm logging a ton of trades. Thanks for sharing. Absolutely. What's up, Howard? Today with strategy down and Bitcoin up is some good evidence for Josh's question, at least. Yeah, hopefully they're not out at the ATM today. That would be a bummer. Andre, agree. I think the combo of diluting and OTC buying, which doesn't move Bitcoin price, rubs people. I don't know that that's a done deal. I don't think. I mean, Bitcoin's price is the combined buying and selling activity everywhere. Is that a thing? I mean, if the OTC gets thin, then they got to go out and buy it somewhere else, right? So I think it all affects the price, but does it move it less somehow? I don't know. Keith Flint, it is 3:30 pre-market, 3:13 now. Deeply Mandel's opinion I respect, but the strategy price on up days have outperformed buy and hodl. Therefore, I look only at Bitcoin's price action and its place in broader macro, meaning ATM selling, not primary mover, in my opinion. Okay. Yeah, I guess I talked a lot about it when I probably shouldn't have had much to say because I'm not really sure. They put that algorithm in there that, you know, strategy selling the shares is supposed to be invisible to the market. But some people have claimed that they literally just stare at the book all frickin' day and they can see, you know, they've claimed that they can see when the ATM's hitting, right? There's that little, uh, I don't know. There's a a time in the market when you just can't get past a certain level or something. Or there's a little bit of a divergence between strategy and IBIT or something. I don't know. There's been different people that claim that they can, they can see it, and it's not like slamming the price down, but there are people that claim that it's at least noticeable, even to, just retail guys staring at the order book. I did all that talking and I realized I haven't even looked to see if I need to make any trades. And that's another, I think, myth that I need to dispel is that people think that they're saving themselves a bunch of time by not trading themselves. But I'm only in here looking at these. I mean, I would probably give it a glance, but until I started making videos every day, I wasn't trading every day. I I trade with my father and my son actually, and my son and I only trade on Fridays, right? So he has just a few positions, but he just literally, 6 days a week, he does not look at his account. He doesn't give a shit. And on Friday, we will roll anything that's expiring to the next day. If we talk for 20 minutes, like less than 5 of it is trading. I mean, he only has 5 positions total or something silly, but um and I've even done a couple of speed runs on a Friday just to prove how easy it is to roll these positions and manage, an account of a reasonable size. Like if I wasn't running my mouth, I could do this in 30 minutes, right? Once a week, 30 minutes a week, I can just come in here and close anything that needs to be closed and reopen it. Easy peasy lemon squeezy. But, if I just did that, then I wouldn't have I wouldn't have anything to talk about 4 out of 5 days of the week. So let's get into it. So GameStop, I sold that put. I think the price, yes, price is back under 26, so I'll probably be assigned again. I think I only held these shares for a week or two before they were called away at 26 and a, what did they get called away at? I forget. Doesn't matter. But nothing to do there, but sit and wait to see if I'm going to get assigned. I sold the 320s. They're still worth about what I sold them for, so nothing to do here. I've also got a handful of 375s that I've had for 10 days. I could roll these out like a week or two for a tiny credit, but I'll let them cook a little longer. I think I forgot to match these back up. What do I have? All right, so I probably sold the 400s against the 250s. And then I think since I have 8 but only 7 performance cover calls, I think the 8th one is against shares. But let me just group these. PMC 250s. And then that makes sense because the 300 strike long calls are barely in the money. So I'm pretty sure I sold the 450s against these. So PMCC 300s. Yeah, that works. Yeah, so there's nothing for me to do here, and really the only thing that would potentially happen that would cause me to come in here and and do something would be if strategy's price was collapsing. Like if there was not much value left in this option, then I would just close it, and or roll it down to collect more premium. Otherwise, if the price is staying the same or the price is going up, I'm just coming in here to really just look and do nothing and talk about this, for anybody that wants to wants to look at it and hear my thought process of what I'm thinking about when I'm looking at these. But I literally don't have to look at this until Friday when these expire, right? Tesla, same thing. This has got only been open for 5 days. If the price drops a little bit more, I'll be forced to roll it early. Yep, nothing to do there. I'm with the price just kind of holding. I'm pretty sure I'm just going to be doing nothing. So let me just speed through this damn thing. Um, yeah, 32 days left. 32 days left. I'll let that cook for another week. If the price pumps to like 325, 350, maybe I'll add another covered call here. But same thing. I'll just let these cook. As an option seller, you should really be doing a lot of nothing. Once you sell it, the whole point is to just wait for the premium to drain into your account. As an option buyer, you have to strike when the iron's hot, right? When the price moves, you got to hurry up and take some profits. All right, same thing here. Nothing really to do, nothing pressing. And then this is the challenge account. Same, this is worth what I sold it for, nothing to do there. This one's worth more than I sold it for, nothing to do there, but let that simmer. And same thing for all the poor man's covered calls. Again, if the price of strategy gets to probably 350, I will start taking off some of this leverage and buying shares back again. Basically to protect myself from the price collapsing again. And in the future, I will be much less in a rush to add these leveraged really because they're really hurting my overall account value. Even though this is allowing me to sell, 10 covered calls, and if I only owned shares, I'd probably only be able to sell 5 or 6. It's still kind of a pain in the ass to the overall portfolio value. This leverage is pretty annoying. But I felt obligated to use some leverage because that's one thing at a retail investor's disposal that an ETF manager is not going to have. They basically form their synthetic longs. And the other thing that they have an advantage with, I think they only like their margin usage is like only like 10%, right? So I think that they can get 100 shares worth of synthetic options for like 3 grand instead of the 30 grand it costs us. So that's kind of some bullshit. But they also have to deal with the rules about only holding like 25% of a stock, a single ticker in a diversified ETF. So it's basically all just smoke and mirrors. Like 90% of their account is in US Treasuries, which is the collateral that they use. And since they're only paying 10% margin for their positions, if they buy 100% of what they can get with the margin, it ends up being like 100% of their portfolio is invested, but on paper, it only looks like it's still under 25%, I think because of that margin use, and it's just a way to get around the fucking rules, really. But yeah, they get much better margin, favorable favorable margin rules, calculations, I guess I should say. Dudeface says, "Is this the volatility we asked for?" Yeah, I don't think I really finished that thought, but, like, that was my understanding of the relationship between the common stock shareholders and the people that are, actually buying these or selling the convertible bonds. Wait, are they selling them or the buying them? Uh, yeah, strategy is selling the bond because they're the ones that are getting the billions. Um, the bondholder doesn't want to deal with the volatility or doesn't want to be exposed to all the volatility. So they've got the conversion option. So they've got some upside, a bunch of upside. And then there's like, they're guaranteed to only do so badly. Like if Bitcoin doesn't go anywhere, they still won't lose their money. And the idea is that they are limiting their upside, and the common stock shareholder is supposed to be pocketing all of that upside that the bondholders don't get in exchange for having balls of steel and riding through the vol. And I don't know if Josh has said it this way, but maybe that's kind of what he meant is by strategy being so predictable, it's making it easier for the arb traders to just short those positions, and they're not risking that short squeeze or that gamma squeeze necessarily, because if strategy's also out there selling, then maybe we're getting shortchanged on not getting as much of the upside return to us as we would have if the people shorting at the top weren't guaranteed of knowing that they were shorting at the top, because they'd have to take the risk of getting wrecked by a blow off top or something. I don't know. Deeply one time shout out to Rob Waffle Goblins. You record in one of the platforms he uses called Gamma Strike. You might look into. Okay, being able to see Gamma by strike alone has really helped my risk management when selling covered calls. I'll mention the 330 strike has the most stacked gamma for this week. Do your own research, of course. So the 330 strike has the most stacked gamma for the week. Does that mean it's the most risky strike? And my 335s are like kind of like right around that high risk strike. Is that what that means? Yeah, I'll have to do some more research, as you said. Dex says, "Can I ask, did you mention to Jeff and Ben to try and connect Josh and Sailor? As Josh has said, he has ideas how Sailor can surprise the market makers and reignite strategy share price." Um, yeah, not really. Haven't had that direct of a conversation, no. Dude face. Interestingly, Josh's move at the same time was to build a cash position on covered call selling, then buying the dip. Grain has adjusted his attack the tail strategy and has instead focused on the 20%. 20% out of the money call purchases, 180 days plus on pullbacks, Dan's new Achilles AI program. So even Grain adjusted his call purchase strategy. Yeah, I don't think that I don't think the strikes matter necessarily as the recency of a blow off top, right? Like, or making sure to exit at a when you get these profits, right? So, back here, what was the highest strikes available back here? Maybe the 600s, 6, 7, 800, something like that. So if you were buying the 20% out of the monies, that would be 210, right? If you were buying the 200s, 250s, whatever, or you were buying the 800 strikes that expired in I don't know, June, July 2025, they were all going to print when this happened and when this implied vol spike happened. So everybody was printing here. But if you didn't use this as a signal to take the profits, whether you got them 20% out of the money or, the deep, deep, deep out of the money, top of the options chain out of the money, and you held to anywhere out here, then you all lost all of your money, right? If you had the well, 250, you still might be able to be somewhat profitable here. But if you had anything under, 225, even if you bought the 20% out of the money is here. Actually, 20% of the money at 150 is only 180, right? So yeah. So the 180s, no, I'm full of shit. If you if you if you bought anything over the 240s, then you would never get in the money. Those would all been losers. But yeah, so if you no, now grains 20% out of the money here would have been fine because you'd have bought the 180s and they would have gone in the money and stayed in the money. Now the point is though, buying the 180s here, if you still don't sell, like maybe you could have 20x that position here. And then if you hold on to it, you still might be up 5x, but you turned a 20x into a 5x. So even though I was bumfuggling the math on that, I think the point still stands that to a certain extent, it doesn't matter the strikes that you enter into the position if you miss the exit. And you don't have to catch it on November 20th. The 29th would have been fine. The December 16th would have probably still been fine. Even the, even if you had bought the 600 strikes, it never got to 600. Like 600 never went in the money, but they were insanely valuable. Like if you had June, July, August, September, leaps, whatever, those made a ton of money here. But every single one of those positions that you didn't exit, at least during this month, then you got screwed. And you probably gave most of that back. If you had the 180s, so the 180s, if they expired on February 27th-ish at 240, you'd made 6 grand. And depending on what you bought them for, right? As long as you bought them for less than 6 grand, then you made some money here. But I don't know. Maybe that would have got you a 5x or something return. Whereas here, it probably would have been a 20x return. Um, so yeah, adjusting your strikes isn't going to save you from not exiting. at a profit, or if you're rolling up, right? So, and here's the other thing though. So if you're buying the 20% out of the money, right? So if we're at 150 a share and you go with the 20% out of the money, that's the 180s. But when the price is 20% over that, then you have ridden the full gamma curve around the at the strike price of 180, right? So 20% over 180 is going to be another 36 bucks. So, once the price got to 215, right? Then you're exiting those positions and you're going to make a tidy profit. But now you've already exited this position. So now what are you going to do? Are you going to sit in cash? You could buy more shares of strategy, but now you're not leveraged. So the profit from it doubling is not going to be a leveraged profit. Or do you take a chance and now, you've got the price is 200 a share, and do you roll 20% out of the money again and buy the 260s? Okay, well that works out. And now you're sitting at 320 a share and you're like, "Okay, now do I go to cash or now do I buy shares or do I roll out to 20% again?" And now I'm at the 400 strike. Okay, the 400 strike would make some money. And now we're back to where we started again, where we have to catch this window right here, or the 400s are out of the money again. So buying the 20% out of the money is only going to get you to the point where you're 20% in the money. And now you've got a decision to make. And at some point, you have to get off of the roller coaster. I don't know, somewhere between November and December. If you can't find a profitable exit point during this month, then you're either going to continue to roll the 20% out of the monies until you fucking lose money here, or you're just going to already be at the top of the chain and miss your opportunity and lose money here. So if you don't take profits and keep them at some point, then there's no strike that's going to save you from yourself. I think is where I'm finally landing with that. Let's see, just poking a few holes as you asked. It might be interesting to adjust the challenge and use Dan's software as an experiment. Perhaps round one as a scratch, and now you start round two. Yeah, yeah, I thought about that as well. But it's just 3 months. I was planning on maybe letting this run for a whole entire year. That would run through what I'm guessing would cover most of this 4-year cycle, this bull run, if the cycles continue. So I don't mind running this challenge for a whole year, right? Um, I think I did. So I did buy some of those 20% out of the monies. I think I had some 375s or something, but I think but not in the challenge account. I don't remember if I had any in the challenge account, but I went ahead and already sold those because they were one of my only profitable positions. So I think I'm proving his point a little bit. Um, but absolutely, oops. It's definitely a lot easier to manage those 20% out of the money positions because you could take profits, anywhere in here. You could even take profits before the run, but then you're going to miss out on the run. So then what are you going to do? You're going to FOMO back into it up here. So no matter what happens, you have to have the discipline to watch the implied vol chart and exit those long positions and not be FOMOing like I did into the 1080s. As soon as they became available, it's like, yay, the 1080s are here. I want 1080s. We're going to 1500 a share. You know what I mean? I let FOMO definitely um, rot my brain. I think Strike and Strife are both tiny currently compared to Strategy. That is correct. So I don't believe they have enough interest in Strike Strife at this time to raise billions. No, they don't. But should they only be taking what they can get with those? Maybe it's just millions. Should they be going for the billions with the ATM when strategy is only 310, 330 pre-market, whatever. Tyler says lots of us FOMO'd into the 1080s. Yeah, that was it was pretty easy to do. Like, I've been selling options for a while, and to me, I'm just on autopilot. But when I turned option buyer somewhere in 2024 after watching Quant Bros 1, I was like, "Oh, okay, so I can make 10x money with these damn long calls." But it didn't occur to me that I had to completely flip the option selling philosophy on its head, right? I'm used to selling an option and I just wait and do nothing. And then, sometime before expiration, I roll it for a credit, or if the price ripped, I just let the shares get called away or whatever. And with buying the options, it was like, oh, okay, I missed selling here. I took a little bit of profits here, but not nearly enough. And it didn't occur to me that if you miss this window, maybe this month window, that you might have to wait 9 more months for that window again, and maybe longer, right? So from March to November, it took us 8 months. So if you didn't take profits in March of 2024, you had to wait until November to do it again. So anything that expired in April, May, June, July, August, September, October were all, maybe not October, all the way to September, we're all losers, right? Because that's when we started to creep up, September. So if you had long calls that expired for the 6 months after the March pump, that every single one of them lost money if you didn't take profits in March. So I still hadn't learned that lesson that, like, hey, when you're given this opportunity, just fucking capitalize on it. Like, you know, even at 330, 400 a share, just just take some profits. Like, I mean, you don't have to exit 100% of those profits, but like, I don't know, half of them, three quarters of them, you want to, put some profits like guaranteed in the books. And then if you want to hold some leftover positions as like a lottery ticket, I think that makes a lot more sense. But yeah, I didn't realize how painful it was going to be to miss this opportunity to cash in, and then, months upon months upon months of chop and correction and just down and to the right. It's this emotional part of the market is hard to deal with. No more FOMO. That's my that's my battle cry for the rest of this trade. No mo FOMO. All right, we're all caught up here. I appreciate everybody tuning in. Be good, Joe.